Well, tomorrow, Lyft will be making its big debut on the NASDAQ to the delight of investors and analysts alike. Joining us to take a closer look at the ride-hailing unicorn is president and founder of Trading the Streets, Scott Rostan. So Lyft, I mean, we've been waiting a long time for this unicorn to come, and here it is. What do they have working for them going into tomorrow's debut, do you think?
Hype.
Hype. Us.
Oh.
So us.
Excitement. Euphoria. Yeah, I mean, it's a decacorn. It's the first one, and we've been waiting for years for this because it's been venture capital. This is the first one of its kind.
I think what's going to be interesting, Scott, is just to see where it trades tomorrow, because as you know, in these processes, companies want different things from their investment bankers in terms of pricing and how it all goes. But I guess I would ask, do you find it, or did you find it, in your time working with companies, a positive that stock was up 30% in the first day of trading? I mean, how do you think about that pricing process? Because what people heard from Lyft is basically the company's become 25% more valuable just in the last 2 weeks. They went around and met with prospective investors.
Which doesn't make a lot of fundamental sense if you think about it analytically. Look, it's a balancing act, and the investment bankers and the company have to do that balancing act. On the one hand, you want to maximize value, but on the other hand, you want to ensure success, because the investors, especially for the long term, want the value to go up. Yeah. Then you can sell into the strength. Something I bring up in class, and I've told this story for the last 20 years in class, like, you're not going to get rich as a founder selling into the IPO, because usually the rule of thumb is you can only sell up to maybe 10-15%. That's kind of a caution flag when too many people are selling. You want to sell in the follow-on, the second round offerings down the road. When can you do that following offering? When it trades up. So there is a little, for lack of a better term, dirty little secret. Yes, you want to underprice it a little bit so that it does trade, and then the company can sell a lot more into that strength.
So now we're talking about the founders, but let's say you're a Lyft employee and you have some stock. What do those folks, I guess, one, need to be looking for tomorrow? But then in terms of them building their long-term wealth, they've looked at this for a long time. What kind of conditions might they want to see over the next couple of years?
So first off, there's standard lockup provisions that oftentimes insiders and employees are going to be bound to, which is very typical. So that's one common thing. But they also look at think about the fundamentals, and ultimately it's going to turn into a personal finance decision for them. How much of their wealth is in with this stock? I mean, look, you could be made a millionaire overnight, and now all of a sudden 50% of your net worth is in Lyft stock. Right. You don't want that from a pure balancing distribution standpoint. So I'd encourage them to think about that from a long-term perspective.
And talk about this long runway that they were on with venture. And I'm looking here on Crunchbase at a Series I. Series I.
The 10th letter?
Okay, that was the last one in June of last year.
And the valuation was?
I don't see it right here in front of me.
I think it was 15 billion.
Yeah, right? I mean,
now they're in the mid-20s.
It's just a lot of capital. I mean, the question I always have, here, and I asked, the people at the Securities Exchange Commission, isn't all the juice and all the upside done already in the private markets with the Sand Hill Road crowd, and the average investor's left holding the bag?
Something else that I often encourage my students to think about is, what is the use of proceeds? Who's selling? What are they going to do? Are they trying to grow? Is this the owners cashing out? Go back to Levi last week. I know it's not as exciting, Blue Jeans, but going back, that was the founding family effectively cashing out. So that is something that should weigh into your calculus of, like, do I want to own and do I want to buy the stock? I still personally believe that Lyft is going to be successful because of the hype, because of the euphoria as an IPO. I'm not saying long term, because they've got to get earnings, they've got to get cash flow positive. But there's so much pent up demand and excitement because people want Pinterest, they want Slack, they want Uber, and they can only get Lyft. So that's, I mean, to me, this reminds me of like LinkedIn 2012 was the first social media stock to get there, wildly successful coming out of the gate because everybody wanted to get their hands on it.
It's not called first mover advantage for no reason. President and founder of Trading the Streets, Scott Rostan, thank you so much.
Thank you.